Unfiltered opinions.
Introduce me.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
In our deep dive this week, we are diving into the permutations around a recession. We're going to call this one the Great Recession. The Great Depression was in the 30s. The 2008 financial crisis happened. This one, or we can call it Trump session. I suppose that's fitting. If you're going to have something named after you, why not it be a Great Recession? There are so many different permutations around how we get to that recession, right? Now, there's a technical definition around a technical recession is 2 consecutive quarters of economic decline, not economic growth, and that is a technical recession, not a full-blown recession, because a full-blown recession, I believe, would be
two consecutive negative quarters of GDP is a recession.
We call it a technical recession in this country.
America has a National Bureau of Economic something or other who pronounce whether something really is or isn't. A depression, I suppose, is just when the recession goes on forever.
There we go. So a prolonged recession becomes a depression. But at what? Let's see. At what point does America constitute a? At what point does a decline constitute a recession in America? Right.
Mm-hmm.
When there's a significant and widespread downturn in economic activity that lasts for more than a few months, typically 2 consecutive quarters of GDP growth, is what a recession is defined as. Now, the interesting thing is there have been conversations that say or that suggest that we could be seeing a recession happen in America. And obviously a recession in America we've spoken about would potentially trigger a global recession.
And to be clear, we have had no growth in the last 15 years. So, I mean...
That's our own problem, really.
I know. So we've been skirting with it already. I mean, in essence, it is... I mean, so we saw a massive recession in the pandemic, but that was like a flash recession almost. We saw one, more intuitive perhaps, was the 08, because that was a financial crisis, which this is. Whereas 2020 was a health crisis and 2000 was a valuation crisis. And what we're looking at is growth disappears, just sort of, goes negative. So people are losing jobs. Interest rates, probably we would see them come down as central bankers try and protect people. Now, we've got high enough rates to give us that wiggle room. If you'd had a recession in 2021 when rates were at 0, there's no space to cut in that regard. Inflation, because of a lack of demand, inflation could actually come down a fair bunch at the same time because there's no demand, because people are losing jobs, unemployment is going higher, businesses are making less money, stock markets are under the cosh, and everything just gets ugly. So, I mean, what do we need to do to prepare ourselves as individuals? If you think one is coming, if you've got an emergency fund, try and make it bigger. If you haven't got an emergency fund, make one. Because whatever, you're at risk of job. I mean, I was at Standard Bank when they did the layoffs post the global financial crisis and the resulting recession. Get rid of debt, especially expensive debt. Try to look for some side hustle, extra incomes, just because you don't know what your income's going to be. There is, and again, when we speak about unemployment in this country, it's weird because unemployment is 1 in 3.
I think at the moment it's approaching 1 in 2.
If you use the expanded definition, which includes discouraged workers,
we're closer to 1 in 2.
1 in 2.
And that's shocking for a country that has 62 million people, of which 28 million plus are on social grants, and you need a workforce to get you through a recession, to get you through a depression. You need to be knuckling down and actually rebuilding your economy. Now, our economy on its own, as you said, has been strangling along, just barely making things around a growth, anything that we consider growth. And at some point, I remember we were talking about growth numbers being at 0.1%. And that's not growth. It's
that's
the
not
literal
growth.
minimum to not be stagnant.
Yeah, so
It's the bare minimum.
We need population. Our population growth is probably about 1.5%. We need economic growth of 1.5%, and we all go nowhere. We need economic growth of above population growth for us all to actually get richer. And over the last 15 years, I doubt maybe occasionally we have clipped 1.5, but mostly we have not, which means we just get poorer as individuals on a GDP per capita. We've just been getting poorer and poorer as a country for the last 15 years. Now, that disproportionately hits, low income houses, et cetera, or unemployed households and the like. But it's pretty much, there are exceptions, but most people get really hurt by it.
Something that we spoke about in Market Matters was you brought up what President Ramaphosa said about not disturbing your enemies. Something else that the president happened to say was on the back of the GNU. We didn't get to discuss this in Market Matters around the budget and the vote and everything that happened there. Now, what the president had said following the approval of the framework, the fiscal framework, which isn't necessarily an approval of the budget, it is of the framework that underpins the budget. We learned these things last week.
We learned a lot.
We're learning a lot this year.
I would like to stop learning.
Or I'd at least like to get a degree for my efforts. Either way, right? Some form of recognition. What came out of those conversations was that at some point the DA said we're walking away from the GNU if this happens or if this doesn't happen or whatever. And then over the weekend, there was a lot of lobbying from big business to say, keep this government of national unity together because it is in the interests of our country to do so. And I saw a response or a comment from the president in his capacity as the leader of the ANC, or I suppose in that regard, saying that we'll take decisions, but we will not be pressured into, or we will not be, no, exact words, we will not be dictated to on what we should do going forward. And I found that as a very stark comment to make, because how do you say we will not be dictated to going forward when at the exact same time you stand on a podium and you say the private sector must come to the party and help the public sector, we can't do it by ourselves, we need public-private partnerships. But then when the private sector says this is how we keep the economy from dying, you say we will not be dictated to.
Yeah.
How does that work?
I don't know. I don't know. And there's something kind of dirty around big business pressuring governments the world over. But let's also be clear. This is how governments the world over run, right? Because they run their campaigns with donations from big business. Big business does have an outside influence in elections the world over. I mean, look at Elon Musk and his...
Prime example.
Yeah, his forays into the US, into Germany, the judgeship which he was trying to... Was it Milwaukee or Minnesota or somewhere? I don't know. Et cetera, et cetera. Those with money are forever going to be trying to influence those with power.
And it's so strange because at the same time, those that then run for political office then come out and say, no, we need the support here, here, and here, but once we're elected, you can't tell us what to do. We will then make the decision. So you want to use the capital to make whatever decisions you want, and you don't want the capital to ask you any questions around it.
Yeah.
So have you ever walked into a bank and been given or applied for a loan and then want to tell the bank what interest rate to give you for that loan? Because that kind of sounds like what's happening here, right?
No.
Back to the recession conversation,
recession
right?
point.
We got sidetracked. We apologize.
Yeah. So it's things like increase your savings. If you can, increase your income. Be careful of taking on more debt. If you can. Now, let's be clear. Excuse me. All of these things I'm saying, lovely ideas. Not easy. Not easy. In the current 0.5% VAT increase.
Not in a normal cycle. Not in a normal economic cycle in South Africa, much less one that could potentially go into a recession quite easily.
Yeah. So there are going to be, jobs become under risk, growth disappears. We haven't had growth, we don't have jobs, but nonetheless. So it's kind of trying to protect your household budget, your household balance sheet. Take a scalpel to your budget. Where are things that you can cut, etc. You know what? And maybe we don't get a recession, and maybe we do 3% GDP this year in South Africa, which is great. And you've prepared for this, and you're like, well, there's no downside. Now you've got increased savings. Take a holiday to I don't know, where can South Africans afford to go Kabecha or something?
Well, I was going to posture a different scenario for or not even scenario, a different use for the fund. So you've built up the emergency savings. The recession or the pullback isn't as bad as we think it to be, right? But you're still getting discounted values on certain stocks. Put that money back into the markets, which is effectively where all of the money is going to go back anyway, right? So institutional money is going to go back there, retail money would go back there anyway. And if we are kind of heading into the next upward cycle, right, and you want to kind of move with that cycle, it might be a good time now to be stockpiling reserves. If you don't believe us, don't take our advice for it, because the show doesn't provide financial advice. But take the advice of Warren Buffett. He's the only billionaire year to date who is still up for the year. Every other billionaire of the top 10 billionaires around the world are losing money year to date. Warren Buffett, who sits on nearly $400 billion of cash in the form of US treasuries, is up for the year.
Yeah. I am.
So he was prepared for this. Two people in the world, two people in history that have been prepared for this event and that were prepared for the 2008 financial crisis. Warren Buffett, Michael Burry.
Yeah. Well, so I mean, my famous Gary Boyson is going to chase me with this forever. I did a buy sell in Financial Mail in January. Buy gold, sell S&P. Man, making Michael Burry look like an amateur.
There we go. No, you called it. But this is the thing. So from where we're standing now, in the event that we are going into a recession, you have to look at how you can recession-proof your life first, your little circle, your little ecosystem, whatever that ecosystem looks like. If you're employing people, if you are a small business, a large-scale business, whatever that recession-proof looks like, this is the time for businesses to bring out, what is it called? It's called an RMCP. I'll tell you what it is in a second.
RMCP.
Yes, Risk Management and Compliance Program. It's kind of something that financial services businesses have to have in terms of policies and that. So in the event that there is a disaster, it's almost like a disaster recovery plan and all of that. This is the time to bring out those papers, right? Bring out that paperwork, insulate yourself, insulate your business, insulate your families wherever possible. And in the event that a recession does happen, you'd be better off. In the event that a recession does not happen, you're not worse off for doing it. You've learned some lessons. You've put in place some things that might even be able to help you if there is a recession in future.
100%. You've cut down expensive debt. You've built up an emergency fund. You've taken knives to your budget, etc., etc. None of these are truthfully, this is what we should always be doing. Just maybe, and truthfully, again, because we've had no growth for 15 years. So
how do we do that? How do we, from a South African perspective, because our scenario is unique compared to other countries, where on the one hand, we're battling political, diplomatic, whatever international relations you want to call them. On the other hand, we have an economy that has been starved for growth for so long that I don't think it even knows what growth looks like. So for context, if an economy like South Africa that's been starved for growth for, call it 20 years, you've lost effectively an entire generation. Because when you had economic growth...
Understand, 3% growth per year, your economy doubles in 15 years, more or less.
Right. Now, when you had economic growth, and you had meaningful economic growth, call it around the 90s, right? Your Gen X's, possibly even boomers, a lot of them were still in their prime. They are now getting ready to retire. Your millennials and Gen Zs haven't had time to build
make
up
money.
anything, any form of sustenance, any form of support for themselves. And the deterioration in the economy over that time has meant that whatever boomers and Gen Xers would have left in terms of inheritance has been eroded over that 15 years. So your millennial, your Gen Z are not inheriting anything. They haven't had time to build anything. Your next generations, your Gen Alphas and your Gen Betas that are here already, now need to get into a cycle at some point, and you need someone to start that cycle off. So you had a cycle, you've destroyed it. You're basically now needing to restart that cycle over. And I think that's what people aren't grasping around, the fact that it isn't just a numbers talk. An unemployment rate of nearly 50% isn't just a numbers talk. It means that there's certain things that become even harder to do. And from a South African point of view, that means that not only are you teetering on the line of recession, it's not going to take much to tip you over.
Yeah. No. And it's spooky out there. Oh. Yeah.
I don't know. I think I've just given myself the spooks thinking about it.
Well, here's something. Capitec's about to turn green.
Capitec's about to turn green after being down and opening down significantly lower for today. But I see there's a general sense of potential just rationality and stability returning to the markets.
There is a world in which this market closes green today. Hey, we were 5% down. We're now less than 2% down.
There is a world in which the market closes green today. I've got a radio show later today. Sai's got a show tomorrow morning. We'll let you know. We'll keep you updated as to whether or not the markets have closed in the green. But we're going to leave the deep dive on that note. And hopefully we've helped you prepare a little bit more in the event of a recession. And we wrap up this week's show with a look at investor insights. This week we are taking a look at traveling with cash. And this is because of something very interesting that I read. Over the weekend, the Times Live put out an article that a certain gentleman was finally convicted and sentenced for something he did in 2017. 2017, he tried to get 3 million rand in cash and around 544,000 US dollars, so around 10 million rand, in cash out of the country via airport. So went to the airport, booked a ticket to Dubai, and was caught with roughly 13 million rand in cash. Now, it's a lot of suitcases, eh?
It's a lot of because when Christo Visa, and he only had a couple £100,000 in cash in a suitcase, which, as he said, you know what, that was just like Tuesday.
I suppose that was a Tuesday for him. And we've spoken about this before. We've spoken about things like the limits on movements of cash. I think the current limit is 10,000 US dollars or equivalent thereof in terms of currency, in hard cash. Okay. So this was hard cash that whoever was trying to move out was trying to move out. So it didn't go as planned in 2017. And the sentencing happened obviously last week. And so I thought we'd look at that. I thought we'd take a look at if you are looking to travel, because we did the travel thing around digital currencies and how efficient it is to just tap and go everywhere. But you and I also spoke about the fact that there's always cash. Always keep some level of cash for emergencies, for whatever happens. You never really know where you find yourself. Is 13 million rand enough cash to keep on hand?
Yo, like, yes.
There we go.
Yes, I sure. I mean, 13 million rand. I mean, you could buy a house and a car and then still have money left over for wings.
That's it. So many wings.
So many
So
wings.
many wings.
I was at a poker thing the other night and they ordered like 108 wings. Yeah. Turns out it's just 9 dozen and they got chowed.
I'm looking at the various countries and kind of the thresholds that they have, right?
Yeah.
So by and large, most of the countries kind of keep a 10,000 euro, $10,000 equivalent in terms of cash that you would be entering or leaving the region with. So the EU, Japan, Italy, China's on that list, right? One country stands out to me. And that is Indonesia. Indonesia, you can have, I think it's Indonesian rupees, I'm guessing, IDR.
Yeah, sure.
Approximately 1 billion, which equates to around 70,000 US dollars. So 7 times higher than every other region that is logical.
But why are people,
what are you doing in Indonesia?
So when I travel, I you know, when you come back from a holiday somewhere, you've got some money left in your wallet or a strange currency, and I put it somewhere, and then if I remember, I take it in my pocket again. It's usually like that. Last time I think I came back with 30 euros. And then when I land, airport, first thing I do is I hit an ATM, which are getting harder and harder to find, and I draw some physical
because other people are hitting the ATMs before you.
I go and draw some physical euros, and then I use my credit card the whole time. So, and last time I think I drew 200 euros, and then quickly at the airport coming home, I spent 170 because I hadn't used much. Actually, no, that's not true. I had used some of it because, like in France, like you go and get a baguette and it's €1. But mostly, I just use cards.
I did that as well. So I was when I was in Dubai, I decided that cards are all good and well and everything, but it's always nice to at least have a little bit of cash. So and it wasn't much. I think it was also probably 100 or 200 dirhams or whatever it was. I don't even remember what it wasn't a lot, but it was to buy a bottle of water where I didn't want to have to go and tap for a 1 dirham or a 5 dirham bottle of water. You know what I mean? So for those sorts of little things, it makes sense to have that in place.
Sure.
The Indonesian currency is the rupiah. It was close to the rupee, but the Indonesian rupiah, which is the IDR. So that's from a currency perspective and at least from a funds perspective. If you're traveling, it is always beneficial to have a little bit of cash on hand. Also, having a little bit of cash on hand, right, means you incur one exchange rate. So if you're going to go tap and tap and tap and tap, and you haven't converted you haven't bought a foreign currency. So if you're in the UK and you haven't bought pounds, every time you tap is a new yes.
So what
and
I do,
there's no mercy from the banks.
No, you get totally absolutely ripped. So I get a card, Shift does it, a card in that currency.
Yes.
So I've got
absolutely
euros and dollars on my Shift app. I get there, I move some dollars into my dollar card, and now
you use the dollar card. Correct. Much easier because then you don't get hit repeatedly with.
And then in Europe, they tell you this transaction is going to cost you so much.
Yes.
And my wife does the math and runs away screaming. I'm like,
never do that. So that's the other thing if you're traveling, folks. Never do the math. I did it for the first time on a school trip in many moons ago, I think in high school or so, right? And the school trip was another story. Accidentally ended up on a trip that had nothing to do with me, but was my first international experience ever, right? And I made the mistake of converting. I remember distinctly what it was. It was a £3.95 cheeseburger, McDonald's-sized cheeseburger. And at the time, I think it worked out to between 60 and 80 rand. I'd never been so upset for a cheeseburger in my life. Still to this day, it haunts me.
No, I mean, I remember landing in Heathrow and there's a Starbucks and I'm excited because this is like 2000. I'd never seen a Starbucks.
Before Starbucks comes to South Africa, yeah.
So I go and I get a Starbucks and the lady behind the thing's like, my love, would you like a pastry or something? I'm like, nope. And then she tells me the price. I forget what it was. I said, I didn't want the pastry. She says, you're not getting a pastry, you know.
You're like, that was just the coffee?
That's just the coffee.
Yeah, so that's quite a bit. I mean, there's limitations where it relates to cash. And if you are going to be traveling, beware of those limitations, I suppose.
Yeah, and don't carry millions of rands of cash.
Or carry millions of rands of cash, but have a reason for it, I guess.
I mean, what are you doing with millions of rands of cash? I mean, this is the whole thing,
Moving it out of the couch? Sorry, too soon.
No, I mean...
I'm just asking for a friend.
Yes, because that's the whole thing with banks, central banks, governments. They want the cash in the system so they can track it. I mean, people say that Bitcoin is unable to be nonsense. You can track. There's
it's a distributable ledger that has everything documented.
But cash is the ultimate. I give you $100 right now. If no one's looking, that's the ultimate. So like 10 million.
So that's the thing. Around that, it's a very important point that you raised because a lot of cash does exchange hands. And in the South African economy, we spoke about this. It's going to be virtually impossible to digitize the entire South African economy when there's so many informal traders, small businesses and everything that are dependent on cash.
Look, and they're trying this PayShap and stuff. But
yeah, but I also don't want to be paying. I don't want to be paying for those transactional fees. Every time there is a transaction, an electronic transaction, there's a fee that's incurred. If I give you 100 rand, I don't pay a fee on that, and neither do you.
Yeah, look, you paid. Well, it depends where you got it from in terms of ATMs. But
Fair enough.
But agree with you, 100%. Yes.
Then it depends on who got to the ATM before you did.
Yeah. So I agree. I mean, I always carry some cash, as you say, because I want to be able to I don't know, whatever. But these days I'm using a lot less of it. I notice I'm drawing much less from the ATM. But 10,000, it's like millions of rands.
Well, to be fair, if we think about it, 13 million rand, right, in US dollars wouldn't be that much. 500,000 US dollars in $100 bills wouldn't technically be that much. 3 million rand in 200 rand bills would also not be that much. You could probably fit, I'd say, close to about 1 million in a duffel bag, in a very small, medium-sized duffel bag or so, depending on who the duffel bag manufacturer is, in 200 rand notes, right?
It's 15,000 notes.
15,000 notes of?
That's what 3 million of 200 rand notes is. It's 15,000 notes.
Yes, 15,000 notes. But how many notes make up a...
So I think a block
is 20,000 in some places.
I thought, okay, when you get the little parley, it was 100. I don't know.
Okay, so let's say 100.
You could put 3 million cash into a duffel bag.
You could, because 100.
Where did you get 3 million cash?
We're not discussing that part now. We're just discussing the movement of the funds, right? Also, side note, disclaimer for our audience, for our community, for those listening and for those watching, this is for educational purposes only. We are not suggesting or implying that you do any of this. We are scenario planning, and that is all that we are doing. Back to the number. 15,000 notes isn't that many notes. If we think about, 100,000 in 200 notes, probably going to be,
500.
500 of them? Right. So a stack of 500 wouldn't be that big. So 5,000 of that is 10 stacks, right? So it's 3 stacks of that.
Yeah.
That's not that many.
No, it's not that many. I hear you.
There's so many places you could put that. Again, strictly for educational purposes only. If you want to inquire more, don't phone us. We're not the people. We don't know these things. We're just speculating here. Let's move on to our pick. What we're adding to our wall for this week.
So an hour ago, I would have said, I was really liking Capitec below.
I was at 2,500 rand. I was loving Capitec, and we already have that as blue chip.
Do we?
Yeah.
This thing's going to close green today. It's only 0.5% down. And then my other was Johnson & Johnson, because they're getting down to the 150 level. They might even get as low as 145. They got their talc powder cancer thing got kicked. So they've got that issue with talc powder that was causing cancer.
And they started using cornstarch and all of that as alternatives.
It was cancerous. And so they put it, they try and declare bankruptcy in that company, and chapter 1, not even 11, just a chapter 1. We will pay money. The judge said no.
Just make it go away.
So the judge said no, so it's collapsed a whole bunch more. The reason I like Johnson & Johnson is, A, it's incredibly boring, and then it gives me a really good dividend yield, which is going to be a little bit higher now that the stock is collapsing. That dividend yield is now 3.25% in dollars. Now, they every so often they get into trouble for killing their customers. I mean, that is just the part of being a drug dealer, I guess. But that's just how it is. They just roll on past, and they have got cash. I mean, cash and cash equivalents, $24.5 billion. Their debt's only $37 billion.
An FDA-approved drug dealer, might I just add.
Important distinction. FDA approved. Yes. I wonder how you get that FDA approved part.
I'm more concerned with the sustainability of their client base. They've obviously recently lost a significant couple of clients. We will not mention names. It's still very sensitive. It is what it is, right? But we're liking the stock regardless.
Haven't we discussed this before, because you've been done? Because I'm like, which client would...
It's fine. I'll let you ponder on that.
I got caught again. Okay.
I'll let you ponder on that. Let's just say baby oil sales are going to take a bit of a knock, perhaps for the foreseeable future. But nonetheless, we are liking Johnson & Johnson. We're going to put it on the wall. The question is, how good is it? How much do we like it? And where does it then sit on the wall? I think for the mere fact that the dividend yield is what you say it is, around the 3.25. That easily puts it above.
That's at Friday's close, and it's going to open today still lower.
So that easily puts it in easy money. Might even put it in like it. So easy money is kind of where we've got those easy dividends stocks that are going to be running effortlessly, making you some good returns and all of that. Is it worthy of blue chip status?
Yes.
Worthy of blue chip status.
You must look at their dividend chart. Their dividend just goes up all the time, every time, just like boring. They just pay dividends always. Every quarter, they pay a dividend. Beginning of the year, they usually tell you what the dividend will be for all the quarters. They don't, there's no stress around, we'll get back to you and stuff. I just think it's where is, I don't have it. There we go. That dividend just trundles along all the time, every single time, going a little bit higher, never skipped, not even during the pandemic, goes from bottom left to top right. I've only got data back to 1992, never skipped a dividend. And it's a beautiful chart. It gently curves. And in these times, I like these.
Okay. I'm actually looking to see so there are certain stocks, and we have them as sort of your dividend kings, right? Something like a Coca-Cola that's paid dividends for 60 plus years.
Yeah.
I'm interested to see how many years consecutively that Johnson & Johnson has paid dividends. So I'm going to see if I can find that out.
Okay, I got to be able to spell Johnson first. How many years has Johnson & Johnson? I'm asking Claude.
Okay.
Claude.
Ask AI. There we go. Ask Claude.
Yeah.
I'm looking to see if I can find the information before Claude.
So I think Claude is traveling back in time. It's taking a very, very long time.
Dividend calendar. Rightio.
Checking 62 years.
62 years. There we go. It's a dividend king. Has paid dividend consecutively for 62 years.
Payout ratio 84% in the last dividend.
Cool. Blue chip it is. Makes sense. There we go. We've got our pick. That's what we're adding to our wall. That's going into blue chip status. And we haven't forgotten about our community. We are still going to reveal that announcement that we promised you. We've got something special that we are working on. Sai and I are just working out some of the kinks around how we're going to do it. It's going to be a community exclusive. So it will be only available to members of our community. And we will let you know, hopefully in the next episode. So we've just wrapped up quarter one. Yeah, hopefully going into quarter two, we should have this up and running, and we'll see if we can get the announcement out to you as soon as possible. But folks, we've come to the end of the show. Thank you for tuning in as always. We leave you with an unfiltered opinion of the week. We never leave you without that. This week's unfiltered opinion of the week is, I miss the purist in the art form that used to be Formula One. And I say that because we're back in Formula One season. And I haven't watched Formula One in years for several reasons. Mainly reasons around the FIA getting involved where they shouldn't be, mainly around adjusting things, and now a driver can be faster than another driver using DRS or be disqualified for something. The purist in me, when I grew up watching the sport, there was a V10 engine, there was a driver behind the wheel. May the best man win when those lights go off.
Agreed. But I remember watching Michael Schumacher win by...
Let's leave team orders alone.
No. Win by 70 seconds in a 90-second lap. I mean, the man was just... So what we do have with Formula One now is that even the car at the back is quite a chunky little car. And whereas back in the day, like Ferrari would work it out and just say at the start, cheers, and you wouldn't see Schumacher again until he overtook you or lapped you.
But that came down to the driver. Look at Lewis Hamilton. There was a race before we switched to the current engines. There was a couple of seasons ago, I think it was his fourth title, if I'm not mistaken, where he started 14th on the grid to finish first. Remarkable drive, something you'll never forget. Worked his way through, passed everybody, worked his way. That was driving excellence. He didn't have to wait for DRS to be switched on or to be enabled for him to pass someone. He didn't have to...
And in yesterday's race, all the DRS in the world didn't help.
See what I mean? So I miss the purest, or the pure sense of what Formula One racing used to be before the meddling, before the involvement. That's our unfiltered opinion of the week. Let us know what sport has been ruined for you. For me, it's Formula One. Until next time, investing isn't hard. Just try it.